It is 1 o'clock. It's time for a special meeting of the Mitchell County Board of Supervisors. We have an agenda in front of us. Are there any additions, corrections, deletions?
None. Motion to approve is presented.
I'll second.
Been moved in second. Further discussion. Hearing none. All those in favor of the motion signify by saying aye.
Aye.
Opposed? Motion carried. Item 2, discuss financing with Northland Securities Advisor Jeff Heil. We have the ballot project
Yes,
that we wanted to discuss today.
I appreciate you having, like you called a couple weeks ago, I happen to be up in this area, I gotta be doing some other work, so I appreciate you meeting today. Yes, we're in the middle of finish up phase 2 for the ballot project, and we are gonna be needing to go to get the rating updated, looking at on December 3rd, we're looking at doing the sale of the bonds. 6.5, we're gonna do all of the tax exempt portion. We did a small taxable portion on it to begin the project originally. And this is the tax exempt, which goes into the city portion. The pre-treatment plant one is taxable. That's the one that's specifically for Valent. This is for in the OSIP
Yeah,
part.
that's great.
So, we just got final numbers. I know I sent some official statement stuff to preliminary that reviewed. I think I had 7.3 million. I reviewed with John Danos this morning. The actual tax exempt portion that we're gonna do is actually gonna be 6.5 million. It won't be the 7.3. And then, once, this will be phase 2, and we're gonna have to do this in 3 pieces. And then there'll be a small taxable part that will come back once all the construction, all the bills are all done. Somewhere between March and August next summer, we'll come in and do that. So today, I just want to verify, we will need to set up a time. Standard & Poor's, they haven't got back to me yet, but I'm gonna be anticipating probably the 18th, 19th, 20th, somewhere in there to do our rating call. We have, economic development director's been on it in the past, and representative from the auditor's office and one of the supervisors is what we've done. So this should be a simple one. We've been rating in the past. We really more follow-up should be pretty concise. But market-wise, I think we're in a good time. It's sort of back, we had a rise up here earlier this summer, it's backed off. I even, gosh, was I here about, when was I here last? Not that long ago.
A couple months ago, anyway, wasn't
Yeah.
it? Time
Longer
just
than
goes
6
by.
weeks.
Yes, a little bit long.
Yeah, before.
But no, rates have dropped off, I think, since that. Yes. I think I got a chart here. But pass that around, you can see. I was up here, we were hit, it rose up pretty good. We were down here lows here last winter and early spring, and this is the month of June. It really came up, and I think we were here, and we dropped off, 20 basis points from there. So timing wise, I think it's wise, and that's why I wanted to talk about getting this phase 2 done here in December, because each year, as you remember, we can only do $10 million per calendar year for bank qualified debt. And that allows us another about 35 basis points cheaper to do a bank qualified. So we want to get that done so that we leave next year open for anything, if you would, on debt. So, and timing wise, we believe there's a lot of comments, maybe even next spring, summer rates could be going up again. And so we want to at least get what we know on this portion completed. So from what I've heard with everything on the construction part is coming along pretty good with Baylor, so.
So you're basically thinking rates should be around 2 1/4?
Well, that's a 10-year.
Oh, okay.
Now here's a 20-year.
Okay.
same really chart, except the yield curve, as you can see,
Oh, it's quite a bit.
that is it's quite a bit. You know, on
And
a
that's
20-year.
And that's on Geo.
This is on Geo, and then if we're rated, then we're gonna come down, take off about 20, 30 basis points from here.
Okay.
So that's more important that we get the rated back when we were on it. So I really wanted to get you updated on that portion of it today, because any questions on where the market is, where we're at on the development project?
No, so we're basically, we'll set that then for, like you
Yes,
say,
we set-
hearing on the.
Well, the hearing, we held the hearing last summer.
Okay.
So we've
I'm
got
sorry.
the legal procedures all done.
Okay.
We just need to get the rating done, and then we'll price the bonds on December 3rd.
These are both Geo, you said.
Yes, these are GEO, 10-year and 20-year GEO rates.
So we'll get the bond proceeds middle December?
Probably either side of Christmas. I don't know if I've got the exact closing date. But we'll do issuance the week after, and then usually it's about 10 days after that. So if we do issuance on the 9th, probably 26th, 7th, I'm gonna guess, is when we close. But we wanna get it all done and closed so that we get the full bank qualification
Okay.
in this calendar year. Because we always talk about other projects. You know, that was one of the things, you know, I seen you had your vote this week, and in a way, that's positive. You know, you had an over majority. When we talked, that was one of the reasons we talked about the bank qualification is on the courthouse, if that was gonna be passed, or where you'd be going on that, or any other project. So we wanna make sure that they don't this calendar
Okay.
year. So.
Anybody have any questions for Jeff?
Yeah, the GEO rates are.
So what would revenue rates be?
On pure revenue, which you know, I'd ran numbers looking at pure revenue that are not geo-backed. Those are gonna be on a deal like on the wind tip, what it'd be probably 3% higher. I ran those numbers on the jail, or on the courthouse on $7 million. Roughly the payment on a GO bond would be in the $540,000, and it's gonna be about $700,000 a year on a TIF revenue. So it's $160,000 higher to do pure revenue on TIF. Now, there's different, like if you're doing a water revenue or electric revenue, those are generally, you know, only 0.5 to 3/4% higher, but TIF revenue bonds are running the upper 2s to 3% higher
3% higher.
than a rated GO that you'd have for your county like yours. So it's considerable cost more to, you know, when you do a revenue bond versus, here's your scenario, which, you know, what we talked about for the courthouse. The most efficient way is that general obligation that is backed, and that's why most of them are done that way. But if that route was used against TIF revenue, it just costs a lot more.
You're basically saying what was it, 700 and how much?
It's roughly around 700,000, so
Seven.
it's a 540 to
Bless
700.
you.
You know, $160,000 annually over 20 years.
Yeah.
So,
That's additional interest? I
That's
mean, what's the
addition-
base interest rate that we're talking for GEO? What would that be?
Well,
Well,
somewhere in this
we would
vicinity
be,
here, probably.
yeah, we'd roughly be in the low 3s on a 20-year, and we would be in the high 5s to 6% on a TIF revenue.
So $3 million some dollars more. Okay. Any other questions for, I think we understand where everything is at. Nobody else has any questions?
So you got it all figured out as new supervisor?
No,
Well, if nobody
Well,
else
it's a
has any
lot
other
more than
questions,
the
we
board,
will
yeah.
stand
Ask all the
adjourned at
questions.
1:13.